Hi, this is Craig Haskell with the Value Hound Academy. You're listening to another exclusive interview with a leading authority in the opportunistic and value real estate investing space. The multifamily investment space recovery has been in full bloom over the last year, with many value-oriented investors capitalizing on today's opportunities. One of those real estate entrepreneurs making a lot of money buying undervalued multifamily properties is Patrick Carroll, founder and CEO of Carroll Organization, headquartered in Atlanta, Georgia. In the last 12 months, Pat's company has been on an aggressive acquisition program, buying almost 2,000 units. Also, he just closed his second private investment fund that will provide buying power of up to $600 million of Class A to Class B minus properties in the Southeast U.S. and the state of Texas. Pat shares with us how he started his company back in 2004, developing and buying single-family homes, and has successfully transitioned into buying and syndicating large multifamily properties with investors. In this interview with Pat, you will learn how transitioning into bigger properties has transformed his business, why learning how to raise capital has helped his real estate business, what value creation things he looks for in a deal, the biggest turning point to growing his business, Pat's biggest challenge is executing his investment strategy, the critical lessons Pat has learned along his real estate journey. If you're a new or experienced investor looking to grow your real estate business, finding undervalued commercial real estate, and partnering with investors, then listen to this interview with Patrick Carroll. Will give you the new ideas and the inspiration you need to find more success with your business. All right, Pat, thanks so much. I'm really excited to be talking to you. You're really, in the truest sense, a real estate value investor, and I want you to talk about how you've positioned your company, the Carroll Organization, to take advantage of today's great buying opportunities.
We basically, we're trying to be a national platform. We basically use our relationships with owners, operators, brokers, to generate off-market opportunities. We try to stay away from heavy bidding situations. I'd say 80% of our acquisitions have been off-market, and then we rely on our management company to add value along the way. We have in-house construction and obviously management expertise, and we try to add value once we take over a property.
And your story is pretty compelling. I mean, you started back roughly in 2004, and what were you doing before that? Because I want you to share with our audience some of the things that you were doing, and what was it that got you interested and got you excited? And what was it that, what decision did you make to kind of get into the real estate business?
Yeah, I was in the clothing business before got into it. It was a family business, and really the motivation to get out of that was I just wanted to start my own company. So really, I got into the real estate business when it was a great time to get into. The stock market had just crashed, and everybody advised me, if you really want to, create wealth, get into real estate. And for about 3.5 years, they were spot on. So I was able to do, a lot of acquiring and developing with not a ton of equity. Obviously, when the crash came, we were pretty well positioned, and we were able to take advantage of some of the distress. We bought a couple of our competitors, and just really grew through additional acquisition. So that's really what it's how I got into it, and that's kind of what we've done since.
And early on, though, you started in the residential space. I wonder if you could kind of walk us through that decision process you went through to say, okay, I want to transition to commercial. What was that decision-making process that you went through?
Just this scale. We wanted to have, or I wanted to be able to do, bigger deals. It really took the same amount of time to do a $100,000 single-family house as it did a $10 to $15 to $20 million, apartment complex. I had to go out and raise capital one way or another. So I just found it, a better opportunity. If you're going to invest the time to do a deal, you might as well do a bigger deal.
So scale. And was there some point that you look back and say, gosh, this was the turning point of my business and it really started to take off? What would that be?
I'd say back in 2010, when we ramped up our property management business and we aligned with some institutional capital, and we started buying a lot of property. That's probably when we did that. We're now looking, to combine more high net worth equity. We have, a lot of people that come to us and want to invest in apartments. So we created a fund management business where we raise, high net worth equity combined with institutional equity, and that allows investors to invest in these funds and participate in all the deals that we buy. So I think a combination of getting the right capital behind us and making it attractive to one-off investors or larger institutional groups, that's probably helped us a lot.
Okay. Well, I know in the last 8 years your company has really taken off. I know just the last 12 months you've bought 8 multifamily properties, roughly just close to 2,000 units. What would you say the catalyst was to really explode your company, really take it off?
Hard work.
Yeah.
I mean, we work around the clock. It's very much a snowball effect in this business. So you get one deal done and people start hearing about you, and you get another one done and more people hear about you and more opportunities are brought to you. So I think the name of the game is get in there and get your first couple deals done. It really is, that's the catalyst. It seems to be, you get in there and get a couple done and it opens up some doors for you.
And you said that 80% of your recent acquisitions were off-market deals. And
right.
So you're getting to these deals and you're getting them done. And there's a lot of folks out there trying to do deals, and you're just getting them done. What do you think your secret is?
Hard work.
Hard work?
I think you have to connect the dots a little better. You have to go to, directly to property owners, directly, to people before, the brokers can get to them. And you have to give them a compelling, option versus going to the broker. So we try to offer a quick closing. We try to put up some non-refundable earnest money a lot of times. We just try to make ourselves the most attractive option for anybody looking to sell property.
Awesome. I know, Pat, one of the properties you recently bought was it was 476 units, and the name of the property is the Renaissance Village at Briar Forest, and it was located in Houston. I wonder if you could tell us what you saw in this asset, this property, and how you plan to create value.
We just love the location and the cost basis. So we were able to buy it, well below replacement cost, and what we feel is an irreplaceable location. It's, right in the heart of the energy corridor. So it hit all our parameters as far as location and quality asset. What we're doing to improve value along the way is continually upgrade the common areas. We really want to make a great first impression on any of our residents, or potential residents. So we upgrade the lobbies, we upgrade the gym, we upgrade just all the common areas, and really beef up the curb appeal. So I think that's something we do on all our acquisitions, and something we'll do on this one.
And to help you buy some of your properties, I know that you recently closed a new fund, a private investment fund you call the Carrollton 2, and you've already bought properties from your Carrollton 1 fund. And this fund here has the ability to buy up to $600 million worth of multifamily properties, and you're focusing at southeastern Texas. How has this changed your company as far as going to this next level and having capital ready to close deals quickly?
It's definitely helped. It's having discretionary capital definitely helps. I will say though, I wouldn't be discouraged, if I was new to the business, because 99% of it is finding the right opportunity. If you find the right opportunity, whether you have your own fund or not, there's always capital available for that deal. So while it's nice, you still have to find those right deals. You just can't go out and do a deal just because you have the ability to do one. You have to really continue to look hard and find one. So while I think it's helped, it's still just as much focus on finding really good deals. So that much hasn't changed as much. Just once we find the deal, the execution's a little easier.
Yeah, it's interesting you say that, because I know that a lot of folks out there that sometimes have trouble finding dollars for their deals, and they get frustrated. But really, it comes down to having a great deal, because the money is there. And
money's there, yeah.
Out there shaking the bushes trying to find the deals is the tough part, right?
That's right.
If you look at your organization, what are some of the things that you're doing that's creative or different or unique to adding value to your properties to create that value?
I think we just try to create an overall experience. So we're big on resident retention. We want to, if we come in and buy a property and right away increase the rents, without adding any value, the residents obviously, would be upset. So we try to come in there, make it a more, enjoyable experience from a service aspect down to, physical aspects. So we upgrade all their amenities. We give them value for, the rent increase we pass along. So we try to make it all pretty, we try to add more value than we charge for, basically.
So what's a great deal look like? If you're out there sourcing deals and you're looking for off-market properties, and you come across a property and you say, wow, this is a great deal, what would some things be important to say this is a great deal?
Yeah, I think a property that is very well located and that we can buy at a cost basis below what I think any developers that can come in and replace that product. So we try to buy below replacement cost. We also like to be able to have something to add to the deal. So if we can come in and this property is underperforming its comparable properties in that area, we look for why it's doing that. So if it doesn't have granite countertops and all the comparable properties have granite countertops, we'll come in and fix that. If the gym is inferior to the comparable properties, we'll come in and fix that. So we look for I'd call it low-hanging fruit that we can come in and fix. We also look for somebody that may just be a bad operator. If we can come in and buy from somebody that is in over their heads, or maybe they only have one asset in this market and they've just gotten tired of managing it, we like that opportunity as well. And obviously we like to buy at what we perceive as a good value. So if the market is doing X, we try to get it a little better than X.
And one of the big things that you bring to the table is, don't you manage your own properties?
We do. Yep. We manage about 20,000 units.
So it's a game of understand the operational side is the blocking and tackling. It's a game that you understand and you're passionate about, and so maybe you find properties that are being managed by third-party management companies and just aren't putting in the same effort.
Oh yeah, that's exactly right. I personally invest in every deal we buy, so we have that added incentive. I would say it's hard to, we're in the third-party business, so I know it's hard to put as much focus on something that you're just managing for a fee, right, versus something you have your own money in. So I think that's, that is true. I mean, I think that helps if you can operate your own property and understand what creates that value.
So, Pat, as you're executing your business plan from an operational standpoint on the deals that you own, that you invested in, what are some of the big challenges that you have day in and day out that you have to deal with?
Well, I would say, are you talking specific properties or?
Yeah, just basically properties that from a property management standpoint, from an acquisition standpoint, from a financing standpoint, any issues that are holding you back from taking the next step.
Mm-hmm. Yeah, I think, from an acquisition standpoint is, Well, we feel like we have a pretty strong deal flow. We always need more opportunity. So, we're butting up against, we need some more deal flow, I would say. And also just sorting through those right, those good opportunities. So I think, deal sourcing is a challenge when you're trying to do a lot. And I also think the execution from the day-to-day management is something too. You have a lot of employees to look after, and you need everybody aligned. So we've come up with different ways to incentivize our people from the property level all the way up. But that's what we're trying to do.
Well, as you look at the apartment market, it's been recovering here for the past year plus, and it continues to get stronger. The fundamentals look good. From a strategic planning standpoint, what should companies be doing today to set themselves up for success down the road to really capitalize on this growing recovery?
Really just get out there and pound the bushes and look to create value on the deal side. So, just sitting back and trying to pluck opportunities off, the websites of brokers and things like that, it's not a huge value add. So I would say get out there and meet with people that own property, try to create off-market opportunities, really separate yourself from the pack is what, is the advice I would give.
And as you look back over your successful career so far, what 2 or 3 things, big lessons maybe that you've learned that maybe you can share with our audience?
I would say pick an asset class and stick with it through up and down cycles. Trying to do all the different asset classes is a challenge, and you don't really become an expert at any of them. So I'd say that's probably the best advice somebody gave me, and it's helped. If you just pick an asset class and obviously take advantage when it's good and maybe buy distress when it's bad. I think that's probably good advice.
Yeah, specialize in a certain product type, and obviously certain markets as well. As you start to grow your company, you're able to set up offices in different locations, so you become specialists.
Yep. Yes, sir.
Well, as you look out over the horizon, you put your crystal ball on your desk there, the general commercial real estate market, how do you see it playing out the rest of this year and going into next year?
That's a good question. So general commercial or just multifamily, or?
Yeah, just generally the multifamily, let's say, and because it kind of plays in it, even though it's leading the pack, how do you see it playing out?
I think it's going to continue to be strong and continue to improve. New supply has not hit the market like it looks to be coming online in 2 to 3 years. So I think for the next 12 to 18 months, you're going to continue to see good rent growth and good opportunities. We're starting to get a little more cautious as it goes, 2 to 3 years out, because new supply is starting to, to look like it's going to come online. So, but I'm generally bullish on the market. I think there's growth out there. I think there's pent up demand, and people are looking for a place to place money. And I think commercial real estate is definitely the favored asset class right now.
Well, let me ask you about interest rates, because you talk about 3 to 4 years out. How do you see interest rates playing a role as far as values? Because at some point they've got to go up as the economy starts to recover. How does that affect multifamily properties and properties in general?
Yeah, I mean, it would have a pretty big effect on multifamily. It would. We basically, when we buy an asset, we project interest rates going up over the life of the deal, and so we project to sell it, a full basis point on the cap rate above what we buy it at. As interest rates stay low, I think cap rates stay low. As they start to rise, I think cap rates start to rise. Multifamily's cap rates got really low because we can borrow. I mean, our last couple of deals, we've borrowed sub 3%. So I think as long as they stay low, cap rates are going to stay low. As they start to rise, cap rates will start to rise more than likely.
Right. I hope you enjoyed this interview. For more information on Patrick Carroll and the Carroll Organization, please contact him at 404-812-8270 or visit their website at www.carrollorganization.com. For any other questions, comments, or ideas, please email me at craig@valuehuntacademy.com.